So we're at the banking department's conference room. That's where we are.
Oh, I get it. All right, sorry, didn't mean.
And we thank the banking department for hosting us. All right, called me to order. It's 10:04. We just have a few minutes just to get some commission business out of the way. We usually do welcomes and introductions. I think there's a small enough number of us that we can go around quickly. So my name is Keith Diamond. This is my fifth term non-sequitive, and I'm the chair of this commission, and I'll just pass it around to my left.
Karen Parker Feld. I'm a visitor to the commission. Hoping and planning to be presenting at our next meeting on May 6th. I spent 30+ years in financial services and economics. I graduated with a PhD in economics from Stanford. Wrote my dissertation on foreign exchange, spent several years at the International Monetary Fund, blah, 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 blah.
Yep. Okay, Michael, you're next.
Yeah,
let's give you quick. We got
Mike Moranti, Deputy Commissioner of Banking, the Banking Commissioners designee.
Okay.
Christine Merrill with the New Hampshire Bankers Association.
Ryan Hill, also with the New Hampshire Bankers Association. Woody candidate, member of the public, some finance background, also Stanford, but MBA, not PhD.
James Karras, visitor from the state treasury.
Tim Kofel, state rep.
All right, online we have Senator Reardon, and then Seth Orenberg, and then Brendan Garrod. We'll go that order.
Good morning, Chairman. Tara Reardon, Senator representing District 15, Concord, Bow, and Hopkinton.
Good morning, Seth Orenberg. I am the academic appointee for the Commission on the Study of Stable Tokens.
Morning, everybody. My name is Brandon Garrod. I'm a Senior Assistant Attorney General, Chief of the Consumer Protection Bureau at the New Hampshire Attorney General's Office. I am the Attorney General's designee on this commission.
All right, Jim Kish, Katie.
Yeah,
and
you
Amy.
bet. Can you hear me okay?
Yep, go ahead.
Yep. Jim Kish, Passumpsic Bank, and I am the banking industry representative.
Morning, Katie Taylor. I'm a staff attorney at the New Hampshire Bureau of Securities Regulation. I'm the Secretary of State's designee.
All right, Jackson Boley, Carter Snay, and Jeff Lebeck.
I'm Jackson Boulay. I am a lobbyist here in Concord that works for Dennehy and Boulay.
Hey, I'm Carter Snay. I sit on the New Hampshire Blockchain Council as a member of the board of directors, and I work for the UNH Interoperability Lab.
All right, and if I missed anybody, then now's your chance.
Jeff Lebeck. I'm also at the UNH Interoperability Lab.
I'm sorry, Jeff, I missed you.
I'm Andrew Schwab.
Andy.
I'm a technologist and founder in the blockchain space.
All right, and Andy, okay. And Carter, did you go?
Dan Nisco and crypto.com.
Oh, Dan, I'm sorry, Dan. My screen's jumping around.
Yeah, Dan Unisco and head of policy, crypto.com.
Excellent. And Carter, did you go?
Yep.
Okay, sorry, got my distractions going. All right, so we'll approve the agenda. Are there any changes? This is to commission members. Any changes to the agenda today? It's basic format. All right, hearing none, we'll just consider it approved. And then we need to vote on the approval of the March 10 meeting minutes. I did make that adjustment to the last meeting that you mentioned, Michael, so. Or to the, I guess it was to the, it was to the last meeting's approved minutes. So any changes or discussion of the March 10 meeting minutes? All right, hearing none. So I'll call a vote on approving the minutes. All in favor of approving March 10th, say aye.
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 Right, just if you could just say it for the transcript, if you don't mind.
Aye.
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 Okay, aye. Any opposed? Hearing none. So the minutes approved. All right. So today's, we have two guests today, and it's exciting that we got them both at the same time, which it worked out. We had SoFi lined up, and they had some things they had to run by their legal department before they could present, and they didn't have enough time. So we're going to punt on SoFi. So in SoFi's place, we have Layer Zero. They're working with UNH, and we have Jeff Lepek and Carter Snay from UNH on. And Layer Zero and Chainlink they occupy similar spaces in the blockchain ecosystem. So we'll hear from them exactly, the similarities and differences, but they're basically at the center of lots of different blockchains. I think Layer Zero has 160 blockchains that they can connect, sort of bridge with their smart contract portfolio. But both of these companies are pretty much deep into the ecosystem of stable tokens and tokenized real world assets. So it may be a little technical today, so bear with us. And maybe not, but this is two important guests that we have. So we have lined up important for informing the commission. So we'll start with Chainlink, and we have Colin Cunningham. He's the head of tokenization and alliances. And we have some others from Chainlink on. I'm sorry. You could introduce your team, Colin, and you feel free to share your screen. If you need me to share your slides for you, I can do that, but I don't have it up right now.
No problem. Yeah, it's probably easier if I share it, which I'm happy to do. So thank you for having us in. I'm Colin Cunningham. I am the head of tokenization and alliances here at Chainlink. But I'll let my colleagues introduce themselves for those that are on, and then I'll get right into the presentation.
Hello, thank you. I'm Mark Gall. I am head of U.S. public sector sales at Chainlink. Happy to be here and honored to present. Thank you.
Now just give me 25 minutes to figure out how to share my screen, and I'll get right to it. 1 second, folks.
They have us use Teams, so we apologize.
Problem. Is this working okay for everybody? Is that coming across fine for everyone?
You can see it, and I'm going to pop it out on our screen.
Great. Well, thank you to this commission for having us in. We're excited to present and tell you a little bit about our story and give you a view of how we kind of look at the world. So with that, I'll dive in. Chainlink has been around. The original white paper was written in 2017 by Sergey Nazarov and Ari Jules. That was 2017, so we've been around close to a decade now. In 2019, the protocol went live, and we've been operating ever since. A couple of other key points that I think are important, maybe to what Keith just mentioned. In 2023, we launched CCIP, which is our cross-chain interoperability protocol, which has been up and running for 2 years, and we'll talk a little bit about that today in the context of everything that we do at Chainlink. And then in 2025, we started doing a lot of work, especially at the government and the policy level, which we'll also take you through today. We're a team of 600. We've been doing this for the time that I just talked you through. And we take great pride in doing it on a global scale. As mentioned, I'm our head of tokenization, and so I'll talk you through everything that we're doing here today. A little context on me. I've been in the blockchain industry for over 5 years. And for 2 of those years, I've been leading tokenization and our stablecoin efforts here at Chainlink Labs. I want to start with the work that we're doing at the policy level and and some of the innovation that we're bringing in. These 3 headlines, I think, quite frankly, speak for themselves. But as the current administration is heavily focused on digital assets, we've been trying to support at different layers of the government here in the US where we can be helpful. So one that stands out is the White House's digital asset report, where they talked about Chainlink and the importance of oracles for powering on-chain markets. This is the core founding and kind of the core principle of which Chainlink was originally founded on, which was moving data that exists in the traditional world and helping that move on-chain in a secure manner. This is a direct screenshot from that report, which some of you may have seen, which we think kind of sits at the foundation of how the future of global finance will work, and specifically how digital assets and blockchain-enabled economies will thrive. More recently, the U.S. Department of Commerce and Chainlink partnered together to bring some of the macroeconomic data that exists out there. We've worked hard to bring that on chain as well. Again, so when you think about, we look at in the macro is how big the problem is from a traditional sense, or how much real world activity is happening off chain today. Where Chainlink really sits is at the center of moving, combining traditional economic activity with blockchain-based activity and fusing those two worlds together. Since 2019, since our protocol and since our Oracle network has been operational, we have enabled $29 trillion worth of total economic activity based on blockchain-based transactions. I'm going to talk through in a second simply why Chainlink actually exists and get a bit more technical or a bit more specific. But I think something to leave this kind of the opener here with is that Chainlink has been growing and has been significantly contributing to on-chain activity from where it was in its early days for a couple of billion to where it is now, which is obviously a multi-trillion-dollar market. So why does Chainlink exist? I think that's where we should begin. Digital assets do not natively connect with some of the traditional global economic activity that's happening. So a couple of things. First, a lot of the data, a lot of the information, and second, the traditional systems that are going to be important for tokenization and stablecoins to thrive at scale on a global way, they don't have they don't have an inherent method of connecting with different blockchains that are out there, which Keith alluded to. Now, the other thing is that digital assets are typically siloed to one blockchain or another. Chainlink also steps in to solve that problem with CCIP, which I referenced earlier. But when we think about Chainlink as a solution and we think about the problem holistically, we don't think about it just as blockchain to blockchain. We think about it in the sense of all of the traditional assets and all of the traditional economic activity and all the traditional economic actors and market participants that are still sitting off chain today. We think about the systems they use, which can be Web3, maybe enabled, Web2 to maybe Web1 or feeling a bit more analog. And then finally, we think about all the different transaction activity that's happening off chain on a global scale across jurisdictions, and how do we interweave and interconnect that?
Today, so I have the day off, and then tomorrow I'm going in 8.
There we go. Thank you. So Chainlink makes digital assets useful for the real economy. And when we say the real economy, I guess that's, we think about that as kind of tokenization, right? Or the world's assets moving on chain and the world's economic activity moving onto any or multiple blockchain networks. So we connect blockchains to real world data and external systems like banks, payment networks, and government data sources. Through this one platform, which we'll walk through today, you can get verified data, cross-chain interoperability, automated compliance, and the transaction privacy tools that are required. And we've worked with, over the last 7 years, the world's largest financial institutions, including SWIFT, UBS, MasterCard, and many others. Through the last 7 years, I mentioned that we began with moving data from the traditional world off-chain to on-chain. What's emerged through our platform is what we define as standards. And when we say standards, what we mean is that we began with data standards here on the left side. We've grown into some interoperability standards, which we'll talk through. And now we're setting the standard for compliance and also privacy. As mentioned, we think about it as any blockchain connecting with any traditional existing system. Unpacking that, what I think, the proliferation of blockchains, there's a conversation or a thought to be had about where the most economic activity is happening. As I think actually the problem on the right is where Chainlink's uniquely positioned to help. As many blockchains as there may be today, I think we can all agree that the size and scope and also the variance in technical the technical builds of existing financial systems varies greatly. And so Chainlink spends time being the bridge between these two worlds to create a unified digital asset economy. By doing this, we actually make it useful, right? We don't want the last thing that Chainlink, or I think anybody wants as the world moves on to blockchain is one that's siloed, segmented, and isolated from one another. The interoperable nature, not only of blockchain to blockchain or asset to asset or market participant to market participant, specifically in a digital native sense, as important as that has been to what Chainlink has built and what, quite honestly, all of Web3 is built. What's a lot more important is connecting in the traditional systems. And so you'll see here from this diagram that we're spending our time across the major verticals and setting standards for the major operations that have to occur from where Web3 and where digital assets have been historically with the formation of Bitcoin, Ethereum, and things that I'm sure you're all familiar with. And really, as we look to the future of all the different tokenized instruments that are coming on chain, obviously stablecoins being the first mover, if you will, to lead the way as a tokenized instrument that the world is seemingly adopting. To wrap here, I think the way we think about supporting blockchain activity, right, is we want to create these open standards. And just like there was TCP/IP, DNS, HTTP, we believe here at Chainlink that we're setting the standard for blockchain activity and what adoption will look like. We've already secured the majority of what's been happening in Web3 today, but we also think the opportunity in front of us is much larger as we look to the existing systems and the existing economic activity that's occurring. I think with the problem well understood and maybe some framing on where we've been and the problem that we're attacking, let me talk you through a bit about what Chainlink provides. So we're sitting at the bridge between TradFi and digital finance, right? We're powering tokenized assets, we're powering stablecoins, and we're bringing digital finance or digital assets into a compliant and private framework. A lot of the time that we've spent, especially over the last 2 years that I've been here, we've been working very hard with interbank settlement and payments. We've been doing asset servicing at some of the largest financial institutions, and increasingly looking at payment providers and some of the others, and all the stable coins and all the digital funds that are coming on chain in various tokenized formats. Across these 5 layers of data, interoperability, compliance, privacy, and ultimately the tools to orchestrate all of these different interactions, we're bringing digital finance and traditional finance together. As part of this, it was important for the maturation not only of the industry writ large, but for Chainlink, where we became the first data and interoperability Oracle platform to achieve ISO 27001 and SOC 2 compliance. This has been instrumental in helping us support and be relied upon by the world's largest financial institutions, and most especially when we think about some of the government and some of the policy work that I highlighted at the beginning of the presentation. Now I want to let's start diving a little bit deeper. As we built this platform and we've established these standards, one of the interesting pieces of our business is that we've gotten really deep into how the existing financial system works, where we're looking at data, compliance, interoperability, privacy. But more than that, we're beginning to look really deeply into the Web 2, the Web 1 systems to some degree, and trying to figure out what would it look like, or what are the problems that different organizations, different states, different financial institutions have, and going into these different problems that we've listed here on the left side. It could be KYC, AML related to compliance. It could be delivery versus payment and how you're using stablecoins and how that interacts with or how that records into traditional financial systems. There's a very large conversation happening now around digital transfer agency and what does transfer agency look like in a blockchain-based world where everything's immutable and captured on the blockchain. We're spending a ton of time, as we always have, connecting off-chain data into on-chain systems. One highlight to call out there is that I think the amount of data that sits in the traditional world and the way you access that data, we continue to find is increasingly complex and increasingly fragmented and fractured in how different groups do it. And then also, I think collateral mobility is becoming a massive opportunity as people understand atomic settlement and they understand the programmable nature of blockchains and smart contracts, which is unlocking a whole new level of capital efficiency and market utility that previously didn't exist. In a snapshot, I want to make sure I just give you a clear view, not only of the Chainlink platform, which I've talked through at some pretty good length so far, but also just to give you a couple of examples of who we serve and kind of the crypto native on-chain finance side on the left side. And then on the right side, some of the traditional financial players that we've served and have served for multiple years. We've established how we have these different verticals across interoperability, across data, compliance, privacy, and some of the others on the right side, like digital transfer agency, where we continue not only to define the standards, but also to deliver products and tool sets that are required for really the tokenized ecosystem at scale, both on-chain and in traditional finance, to access products that they need. And one thing that I'll call out that sits at the foundation of everything that we do is the Chainlink runtime environment. What the Chainlink runtime environment does is actually allow folks not only to access some of the products that we've built and that we've built for others and benefit from those, but also to design their own workflows, dependent upon their technical organizations, dependent upon their jurisdictions, how they report into regulators, but giving them the tooling to enable them to move their business from Web 2 into a Web 3 or blockchain-enabled economy. So who is Chainlink serving? Who do we benefit? And what are some of the stories that I can share with you? We're the market leader powering digital assets. So to give you just some market framing here, for every transaction that's happening on the blockchain today between different counterparties and different smart contracts that are supporting those transactions, Chainlink's oracles are being used and incorporating the data required for those smart contracts to actually be smart. Again, this sits at the foundation of why Chainlink exists, right? Which is that in order for smart contracts to self-execute and to perform and do what they do best, they need information. Chainlink is the Oracle network that is providing those smart contracts and the blockchain-based economy writ large with the information that it needs to power these transactions. The ecosystem that we've built, I've talked to you about our team and how we came to be, but the ecosystem that we've built has led to 2,600 different projects and organizations that we've integrated into. We support over 50,000 developers, and our community is quite large and growing daily. As much as our roots, if you will, are in Web3. Again, over the last couple of years, we've spent an immense amount of time with the world's largest financial institutions and all the different products, all the different standards, what the Chainlink runtime environment is enabling, and what CCIP is trying to interconnect are all these different institutions, all of their traditional systems, and really working with, I would say, select departments and select divisions of these organizations to help them come into a Web3 enabled world and take advantage of smart contracts and blockchain in a way that positions their business for the next wave of growth or the next 20 years, which we believe will be a blockchain enabled world. When we think about tokenization, I'll separate it into two slides. What does it look like to accelerate the adoption of digital money or digital cash? And then also the other side is really tokenized assets or digital assets, traditional assets tokenized in some type of format onto the blockchain. From left to right, what we've been doing is we've been working with like the likes of Connexus from JP Morgan, interconnecting them with Web3 protocols like Ondo to settle tokenized US treasuries against JP Morgan's USD deposits in real time. We've also been working with MasterCard to enable transactions for their customers via the blockchain. And then finally, speaking to the international or the global nature of what Chainlink does, we've supported Visa and Hong Kong Monetary Authority in cross-border transactions, which we see stablecoins as a fundamental piece of this pie, if you will. On the tokenized asset side, one of the key focuses for Chainlink has always been working with and integrating into the traditional players that exist. We don't believe that Chainlink is replacing the world as it is today or the traditional financial institutions and organizations that exist. In fact, we're just trying to enhance them. On the left side, you can see that we've supported SWIFT and UBS Asset Management by integrating tokenized assets into Swift's existing payment systems. This speaks to the ethos, I think, of exactly what Chainlink has done, right? Is understanding how traditional financial systems work through a partner like Swift, engaging with the likes of a UBS at a global level to understand what they're trying to achieve with tokenized funds, and then really sitting at the center of bridging these worlds together. As those two organizations move into a blockchain-enabled world, what are the pieces of the puzzle, and what are the pieces of technology, the products and services that Chainlink can present to enable those organizations to complete such transactions? And we're having a lot of success time and time again in understanding those problems, building valuable products and services, and then enabling our clients, our partners in the market writ large to use technology to come on chain. I'll take a pause there. And just as we transition here, we've covered quickly, or we've covered where Chainlink came from, the products and the technology that we've built and who we're serving. Given this commission's focus, I want to spend the last 10 minutes just really focused on stablecoins and specifically tokenization and some specific products and maybe some more workflows, if you will, which Keith alluded to. It might get a little more technical here, but hopefully it gives you a better, a bit of a deeper dive into some of the stuff that we're doing and where that could be valuable. This one's short. The market for stablecoins is now at 316 billion, and it's not going to get smaller anytime soon. And for what it's worth, there's also an emerging growth in tokenized deposits, which I'm sure you're all very keenly aware of. And so when we think about tokenized cash as an instrument, it's getting, I think we're at the very, 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 very early innings of this effort. Our belief is that stablecoins should fit into the traditional financial system, right? We've talked about this a good bit, but the act of tokenizing something is the easy part, right? There's a number and continuing to proliferate tokenization platforms out there that will allow you to tokenize the asset and put it on chain. But designing a stablecoin that's trustworthy and useful, we think requires a next level of secure infrastructure, which Chainlink is uniquely positioned to provide. So we've built the platform in a way that no matter what the stablecoin's design is, or who the tokenization partner may be, or whatever blockchain it may be on, as there's also a new blockchain every week, we provide all the standards and services to unlock adoption of that stablecoin. And I want to be specific in saying that it's not only the technical properties of what that stablecoin may need to thrive, or just to perform in a blockchain-based environment, but also the ecosystem of different use cases, which we just talked through with the likes of Swift, Visa, MasterCard, Connexus by JP Morgan. The way stablecoins or the way tokenized cash will be used, I think is going to continue to proliferate. And so these are some of the key standards and some of the key products that'll be required to unlock that. So when it comes to assets themselves, and we're focused on stablecoins, I think, primarily here, but this really applies to tokenized assets writ large. There's 4 things that we want to focus on. First is data and proof of reserves. Second is multi-chain distribution. Third is built-in compliance. Fourth is private transactions. One thing to call out here is by integrating Chainlink's platform, you're going to connect to 97% of all cross-chain value that exists today. So what does end-to-end support look like for tokenized digital assets using Chainlink's technology? So I'll tie a couple of things together here. First thing is when creating a stablecoin or a tokenized asset, you want to check for the proof of reserves and the composition of the asset so that you can actually verify that the asset, as it's being reflected on chain, is credibly backed in a way that matches either the regulator or the jurisdiction's requirements, or also just to manage the investor's expectations and to be in line with whatever your issuance guidelines are. As part of that, you want to not only check what is the breakdown of the reserve and what's actually behind the thing that you're buying, but also policy awareness and ID checks. These happen through two Chainlink products. One is called Proof of Reserve. The other is called the Automated Compliance Engine. Excuse me. Second, as part of the minting process, so I mentioned earlier that minting is the easy part, and there's many different tokenization platforms that enable you to mint. One thing that Chainlink includes is, and part of our Proof of Reserve offering, is something called Secure Mint. What Secure Mint does is it actually integrates into traditional systems and references and checks that the reserves outstanding in the accounts off chain match the value that's being minted off chain. If there's any discrepancy in the total value backing the asset off chain versus the amount that's trying to be minted on chain, Secure Mint will actually prevent that token from being minted to prevent any misuse of funds on chain. And so this is a very specific example of where Chainlink sits at the middle of integrating traditional systems and the tried and true banking system and some of the custody and transfer agency functions that are required with the minting of tokens on chain that can be offered to any or specific investors or that are outlined on chain. Third, through CCIP, our cross-chain interoperability protocol, you're ensuring that the asset is minted with unified interoperability, ensuring that it can be reached and again reached 97% of the total available capital that's sitting in the markets today. And then through data feeds, right? One of the final pieces here is that a lot of the protocols and a lot of the technology that exists today, most of those technologies and those protocols, whether it be like a lending protocol or some of the different markets of financial activity that are happening around tokenized instruments, they trust Chainlink's data feeds to verify asset prices when assets are changing hands, whether that could be borrow, lends, repos, buys, sells, whatever it may be. And so we're not only backing the asset itself, but in step 4, we're providing the infrastructure for a lot of the technology that's enabling the market utility or the financial activity that'll actually occur. We're sitting in the middle of those transactions as well, or Chainlink's Oracle network is. So we are the largest provider of the on-chain proof of reserves, which we think is fundamental for the success of any tokenized asset, and most specifically stablecoins. Just to review this, it fully prevents automated or tamper-proof reserve monitoring, prevents over-minting, and the reserves are again verified through Chainlink's decentralized Oracle network, where we kind of began today's presentation. Effectively, what we're doing is taking any of the off-chain information that the issuer of that stablecoin would deem important before that asset is minted on chain, and ensuring that the off-chain records and the on-chain records match. Once they do, we're enhancing the asset with CCIP for interoperability and allowing the asset to move across not only blockchain-based environments, but to access some of the traditional systems that are being blockchain-enabled today. Through this one integration, we would be providing asset issuers and anybody in the tokenization space with the ability to reach across the entirety or the majority of the blockchain-based economy. We'd be bringing on a lot of the traditional financial systems that exist and making sure that the data that sits in these off-chain systems is easily usable in blockchain-based smart contracts, and thus providing security for the transactions that are occurring across the space. Now that we've covered proof of reserve, Chainlink's data feeds, and CCIP, I want to move on to the automated compliance engine. This again is just very naturally what's happened over the course of our journey, where we've looked at the way that some of the traditional world works on identity management.
Completely ignoring him. That's my fault.
Oh, okay. All right. Sorry.
Go ahead. Oh, I muted him, sorry. You have to unmute Colin. Sorry, I muted you by mistake.
No worries. We all good now?
Yep.
Cool. So the automated compliance engine, this is important so that for any tokenized asset or for any stablecoin, we're just like we talked through the example of the proof of reserve, looking through or understanding kind of the underlying holdings of any asset that's being minted on chain. The automated compliance engine performs a very similar function where it's actually plugging into the existing policy, the existing kind of compliance standards, and plugging into kind of regulator or jurisdiction requirements, and ensuring that the asset as it moves on chain is not open for any and all, but is actually meeting the requirements and the compliance standards of the institution, the issuer, and specific to the jurisdiction that they're in. Finally, and this is one of the more recent pieces of technology that Chainlink has released, is confidential compute, which unlocks privacy for digital assets on any chain. Again, the reason for this is because I think we're at this turning point, which I'm sure you all see perhaps even more than I do, where there's a new wave of the global economy coming on chain. And as we move into a much broader swath of the world, from the original crypto native groups that were interested in 2019 to some of the early adopters in the early 2020s, I think we're into full-scale institutional adoption. The fact that we're having this conversation is a reflection of that. And so confidential compute is actually ensuring that the private information of individuals and any private information related for any fund or token issuer or asset issuer is also protected through the process. And so we've built an entire stack through Chainlink's runtime environment to enable confidential computing that doesn't put private information at risk despite being on public blockchains. This sits at the center of what we do, which is, again, Ondo being a Web3 protocol and Connexus by JP Morgan, kind of the innovation and technology division of JP Morgan, interconnecting through Chainlink to settle tokenized assets with cash sitting within JP Morgan. The other example here that I'll point to is where Chainlink plugs in on a couple of different fronts, both with the nav feed at the top where we're providing data, CCIP enabling funds to move from blockchain A to blockchain B, whatever those blockchains may be. And then finally, providing the interconnectivity for digital transfer agency, which is required for UBS as a fund issuer, into the existing systems of SWIFT. And this is the type of work that we have had to figure out along the way with the partners that we've had, and has led to a lot of the products, technology, and the innovation that I've shown you today. Quick conclusion for us, we believe we've built a comprehensive all-in-one platform in the infrastructure required to help you launch, secure, and scale digital assets within the state of New Hampshire. 3 points. We unite traditional finance with digital finance in one platform. We keep data private with institutional grade compliance and security. And we're the institutional infrastructure for blockchain. 2,600 integrations, 70% of the market share, and trusted by the world's largest financial institutions. And thank you for your time today. I'll stop sharing my screen now.
Thank you for that presentation. That was very broad and deep at the same time. So we'll open up to questions from commission members first, and then we'll go to members of the public. So just raise your hand if you're online. Anybody in the room have questions for Chainlink?
Got it.
Professor Ornberg, you want to ask a question?
Thanks for an excellent presentation. That was not too technical. That was really well tuned in. But I want to drill down on one concept around oracles and liability. I certainly appreciate prudence, and you have obviously built in a lot of prudential capacity and compliance into your system. But I want to understand better who is responsible for an oracle failure along these chains. Now, you can tell me this is right or wrong. I have sort of a generic understanding that oracle failures might be one of the most significant failures as you kind of connect to the messiness of the outside world. And where exactly does liability occur in addition to prudence? And if you'd like to take that question directly, you could also frame it in this way. I'm also kind of curious about your structure as an organization. You're a corporate organization. A lot of the other organizations you work with are decentralized autonomous organizations. And I'm also curious about how the governance structure impacts who will end up having liability for some chain related error, particularly around oracles, but I'm happy to hear sort of generally your response to that.
Let's start with an explanation of what an Oracle is, like 101, and then go into those answers. And Colin or Seth, if you'd like to take that up. Yeah.
Well, Seth, that's actually an interesting question. Would you like to explain? I'd love to hear it.
Well, I'm as a somewhat non-technical person, I understand that the Oracle is the software that interlinks the very hard-coded smart contracts on the chain to some type of interpretation of external events. So we could make a prediction market contract that it will rain more than 1 inch tomorrow at a particular location or particular zip code. And an Oracle would have the capacity to basically through an API call or some other technology to receive that information and then effectuate a smart contract. And this could have, upstream and downstream chain effects, because what we're doing here is something that is, reliant on information from the real world at this point. And, when that happens, when you interface real world information with automated systems, sometimes things occur that weren't predicted. You have, black swan events or uncertainty, or they can just be an error in the coding. But I mean, that's a very non-technical understanding. I just see them as the connection point between the hard code and the real world. And I'd love to hear more about how you see them and whether or not they are sources of major liability that goes beyond potentially prudence and compliance.
Yep. So pretty great explanation, Seth, of Oracle networks. So one of the things I'll speak to is I think a key piece of our focus at Chainlink and what we've built is fault tolerant Oracle networks, right? Which are just inherently decentralized. So that's one of the key pieces that differentiates Chainlink from really any other solution in the market or any other infrastructure provider that's sitting at the intersection of digital finance and traditional finance, is the nature of the centralized nature of the way these Oracle networks reach consensus around different data points, right? So 1 inch of rain versus 2 inches of rain for prediction markets, as an example. So that's kind of been the telling and key piece of Chainlink as a whole in our history. Now, the thing that I would add here, and when it comes to liability and some of the corporate structure questions that I think you have, Seth, I'm going to have to defer to my legal team, but I will absolutely connect you with those individuals so that we can get you the answer that you need. The way we've thought about it, though, and I think it's kind of in line with the the ISO and SOC work that we've done, it's important that we upgrade the security, because I do think that where the Web3 industry has been historically versus where it's going are worlds away from one another. And so I think we'd actually be, love to have that conversation. And I'm sure others inside of Chainlink Labs on our legal department have handled kind of the liability question, Seth. So I'll take that as an action item to come back to you on this. And to the degree it's relevant to the commission broadly, Keith, can absolutely share that.
I appreciate that. I just want to briefly add that I think that the relevance to the commission is that as the state thinks through which players it would build into the pieces of the puzzle, while compliance is obviously crucial, there could still be errors and issues that would require litigation and some identifiable figure with liability. And actually, a corporate structure offers that in a way that a decentralized autonomous organization does not. So I think it will be interesting to look at the structure of the service providers, because it may impact recourse the state would have in the instance of some type of failure.
Yep. Thank you for that context. I'll make sure that we get it across. Thank you.
And just a side note, on DAOs, decentralized autonomous organizations, we passed legal personhood legislation here, and UNH is having a hackathon on April 18th and 19th at their Durham campus. Carter and Jeff are on the line here. So that's some interesting side events that are happening in New Hampshire. I have a basic question. This is a baby question. Is all of your code open source? Or what percentage, or what components are open source? To me, that's the transparency issue.
Sure. I think the majority of it is. I'll double confirm that with my technical organization, Keith, and come back to you on that. It's a great question.
All right, great. Any other commission members have a question in the room or online? And I'm going by hands on the Teams interface there. I can't see all of your hands.
I think Jim Jim does.
Okay. Jim Kish?
Hey, sorry, I was used the physical hand and not the digital one.
Yes.
I'm all straight now. Hey, great presentation. I think, one of the things I took away with is that Chainlink is broader than I had anticipated. And I like your connection with the TCP/IP stack. It really is helpful in shaping exactly what you do, a great context. Hey, a question for you. Really, you're around proof of reserves. How are you working with? Are you working with tokenized deposits, which I think would be probably easier than some of the other asset validation?
Yes, we are. It is easier. It's usually one for one, or we hope it would be.
Yeah.
The stable coins have been just a much more, I guess, relevant or interesting use case around this, Jim, mainly because of all of the some of the very positive headlines, but also some of the very negative headlines that stablecoins have experienced over the last 5 years. Proof of reserves was actually born out of a lot of the fact that stablecoins were not all inherently stable, or the definition of stable seems to be kind of stretched, if you will, right? And how different people around the world position and frame stablecoins. And so the way we thought about it as an organization was someone should step in to provide the reserves underlying in smart contracts for those assets.
Right. It strikes me as, there's probably a number of different ways that you could validate deposits for tokenized deposits. And I wonder if Chainlink gets to the point where it enters the fray and becomes a really essential part of, the banking ecosystem.
That's me.
Yeah, that's the journey that I think we're on, right? And I
Okay.
think that's also the evolution of where we've been, Jim, which I hopefully has resonated with this audience, is that although we started as Web3 and, confirming a price feed, or, even to Seth's example, right, of like just moving a weather data point on chain, right? That was happening 7 or 8 years ago, right? What I think
Yeah.
we're much more interested in now is, because the stakes are so much higher, right? Because of calls like this and because of how much of the world is adopting blockchain-based transactions, things like proof of reserve are critical in the sense that they're providing not only a sense of comfort, but actual protection at a smart contract or technical level for assets that the American public, residents of New Hampshire, and at a global scale, people are going to try and access and understand. We think these types of technologies are fundamental if we really see widespread global mainstream adoption of blockchain-based transactions.
Okay, thank you. I'd like to go a little deeper offline and talk about some banking applications. Who's the best contact point?
I'm happy to speak with you.
Okay,
me and
thanks.
Mark will set up a call and then also get back to Keith and Seth on their questions. So thank you for that, Jim.
Thanks a million.
Right. We had a little technical glitch here. Hopefully you guys didn't notice. And I heard the last part of that conversation, so we'll rewind the tape and fill our group in here. Any other questions for Chainlink? If nobody else has a question, and members of the public as well, so anybody up on this call. Yes, sure.
Basic question. Once the state, let's say, agrees that it's going to be setting up some form of stablecoin and working with Chainlink, are there ongoing costs to comply with what Chainlink is doing? Because you have new products that come along. What's the what's the model for keeping up with that? I mean, is it automated? Is it subscription? It's a very primitive question I'm asking, but just trying to get a sense of understanding of what it means for the state.
Sure.
To
Yeah. So
apply and be a part of this.
yeah, absolutely. I think one of the things we'd want to determine is probably the technical level of commitment that you'd want to make, I guess is one way to frame it, right? So when we talk about the Chainlink runtime environment, there's a good number of organizations that want the technology that we've built, a couple of the out-of-the-box products that I've shown today, and then they want to enhance or build within the systems that they have. One of the things that we could think about with New Hampshire is we could just hand over the technology and let you go with it. The other thing we could do is give you some out of the box products, which is more of a subscription based relationship. But I think a middle ground would probably be good, where we start to think about what is the state of New Hampshire trying to achieve, and what does technology look like today that Chainlink offers, and a lot of the other, I'm sure, service providers and groups that you're talking to, and how do you use Chainlink's platform, right, to integrate and build this in a way that's unique to New Hampshire's needs. I think that's the sweet spot that we'd want to fit into, and we'd be willing to be flexible in how we work with the state on that.
Yeah, and if I could just foot stamp that, let's take a very simple product that Chainlink has, and that's proof of reserves. So this again is the product that attests to how much you have backing any sort of digital asset. What we find is that yes, there is always an integration cost, and yes, there's a kind of a subscription or usage level fee, but when referenced in comparison to something like having to have audits or attestations done by a third-party auditor, typically we find organizations save tons of money going with something like a programmatic attestation of proof of reserves.
So I had a question about proof of reserves, actually. So on your slide, you had, I think, 4 buckets. You had treasuries, cash, can't remember all of them. How do you, and just put an underscore under proof of reserves. This is a very important concept for safety and soundness. How do you implement proof of reserves with different buckets, like for cash, for instance? Are you interfacing with the bank where the cash is being held? How do you verify all that?
Sure. So you're typically interfacing. We typically separate 2 organizations. You're separating the issuer themselves, who's responsible for the issuance and the legal documentation of the asset itself, and the service stack behind them. Usually the service stack is going to be some type of fund accountant, or it's going to be the custodian themselves, or kind of fund administration. So that function can sit within the bank, depending on who the issuer is. It can also sit as a third party that is regulated and licensed to do such fund accounting. Can also just be the custodian themselves. There's different layers to where that can come from. Obviously, we would want to work with and plug into alongside New Hampshire or whoever's issuing or participating in any type of tokenized instrument within New Hampshire's borders into the source of truth. But the source of truth is highly dependent. And Jim, maybe we can get into this in the banking integration conversation, right? Where is the source of truth? Who is liable for reporting that truth on a daily basis? And how do we take a look at the systems that they've had, which I've alluded to a couple times, and ensure that that's ready for a Web3 or digitally asset-enabled world?
We're coming up on time here. Just last little question on that previous comment. Does it piggyback on your Oracle system? Is it the same, similar, or subset? Is that how proof of reserve works? Okay.
Yes.
All right. That's pretty cool. All right. Thank you very much. We could probably go on for another hour. We appreciate you putting all the effort into that presentation. It was very relevant, as Professor Orenberg said.
Thank you. And thank you for your questions. And yeah, we'll follow up with all the answers directly to you, Keith, and make sure that we get the right people what they need.
We'll distribute it. And we try to be as transparent as possible. So we put everything on our web portal. So any proprietary information that you don't want up there, please don't share. I guess that's the point.
Understood.
Sounds good. Thank you, everybody. We'll get back to you.
Thank you, guys.
Thank you.
All right. And time check, we're about an hour into the meeting, and we have another presentation that should be very similar. The concept should be relatable to the previous presentation. So without further ado, I think we have
Simon's on.
Simon Batsis, and if you want to introduce your team, Simon.
Yeah, absolutely. It should be a similar presentation, Keith, but just a little bit better, Nice to see you all. Simon Batsis here, Chief Business Officer at Layer Zero Labs, joined by my colleague, now York, who leads customer success for us. Should we go ahead and get started, Keith?
Yeah, the stage is yours, and you can share your slides unless you need me to do something. I can pull it up.
Nope, we should be good. Are you able to see this?
It's, yeah, coming in loud and clear.
All right, perfect. All right. So as I mentioned, Chief Business Officer and our customer success lead, Niall. A little bit of background on myself. I've been with Layer Zero for about 2.5 years now. Previous to that, spent about 7 years at Google, 3.5 years on the Google Cloud side, and then 3.5 years on co-founding and leading the crypto and digital asset efforts for Alphabet. That is ultimately how I came across Layer Zero on the heels of a big partnership between Layer Zero and Google, and joined us. And it's been it's been a very fun ride ever since. We have some really neat ties to New Hampshire, right? All three of our co-founders went to University of New Hampshire, so I think there's just a lot of home turf overlap. But nice to see everyone, and thanks for having us today. Now, would you like to introduce yourself quickly as well?
Hey everyone, would love to. Nice to all meet you. So I've been at Layer Zero about 2 years as well. Previous to that, I was a product manager in the space for about 7 years, and worked at other startups within the crypto space. Lovely to all meet you.
All right, so we will jump right into it. We have about 45 minutes or so. We'll try to breeze through some of the content that we have for you all here today. Please stop us at any point if you have any questions. Our sort of offering, while it does overlap with Chainlink in some cases on the interoperability side, and you'll see that also kind of deviates a bit of a different direction. So we'll talk about that as well. We'll talk about sort of in general our business over the past 5 years and what interoperability means for Layer Zero in the industry. We'll talk specifically about the Wyoming stablecoin project that we did with the state, and sort of how we've been executing and working on that for the past 1.5 years or so, together very closely with the Wyoming state team. And then we'll also kind of bring you up to speed on one of the newest announcements that we made on February 10th of this year, which is around Zero, our own Layer 1 blockchain, and we'll kind of explain what that means and why we brought it to market with the likes of Citadel Securities, the DTCC, the New York Stock Exchange, and a few others. So that said, Layer Zero Labs at a glance. We've been around for about 6 years now, just about. 160 employees. We have headquarters in Vancouver, Canada, so about 100 people in office in Vancouver. That's it. That is where Niall is based. Our commercial offices are in New York City. That's where I'm based, about 30 or so people there. And then we have engineering offices in Hong Kong as well. We've been very fortunate to raise roughly $280 million at a $3 billion valuation at the latest, which was in 2021. Co-led by Sequoia and A16Z, with participation from PayPal, Franklin Templeton, Temasek, Samsung, and kind of a variety of others. The folks that you see on the screen and kind of logos that you see here are a combination of either our customers like Tether or Ondo or Paxos, our investors like Franklin Templeton, Sequoia, and others that I mentioned, as well as some of the newest partners that we announced on the institutional side, from JP Morgan to the Intercontinental Exchange and others. And we have roughly 80% market share, and I'll explain kind of how we measure that and what that actually means in the context of interoperability. So just sort of a very light preview, right, of like what we've been doing for the past 5 years and why we set out to solve the interoperability problem. As everyone knows, there are hundreds of blockchains today, and ecosystems and users and customers are spread out across these disparate blockchains, right? You have Layer 1s, Layer 2s, Layer 3s, subnets, supernets, and kind of everything in between. And that is, fundamentally why we set out to solve this problem. If you turn back time a little bit to sort of when Ethereum came about, there was a sprawl of many different blockchains that came to market following Ethereum, right? And that created sort of this problem of how do you actually communicate between two different blockchains when the code environments and the frameworks are entirely different. And the biggest use case back then and today for interoperability was value transfer. How do you take, one piece of, be that tokenized dollar, be that an RWA, from one blockchain to another? And that's where we saw sort of the emergence of, almost a taboo word today, which is bridging, right? Initially, how the industry approached interoperability and bridging was wrapping assets, right? So wrapping on source, minting a synthetic version of that asset or representation of the source on destination, creating smart contract risk. And this is sort of what led to $2.1 billion worth of exploits in the space, and another couple billion that were caught by luckily white hat hackers, and sort of brought to the surface before the exploits actually happened. And so this model obviously did not work. And that is why we introduced pioneers of the space, what we call general message passing. So instead of wrapping of assets, we took everything from first principles and said everything is just data, everything is just a byte array. Let's treat it as such and figure out how to actually transfer data between these different applications and think about native asset transfer rather than the wrapping of assets. And so we created sort of this unified global layer that sends and receives byte arrays of data between all the different blockchains that we support. I'll explain sort of how that works in a second, but akin to really what TCP/IP is for server communication over the internet is what Layer 0 is doing in the blockchain space. So if you fast forward to now, we connect roughly 170 different blockchains, EVM, non-EVM, private, public, permissionless, it doesn't matter to us, we connect it all. Roughly over 700 different applications supported today. To date, roughly $250 billion worth of value transferred securely between these different blockchains. And this is sort of where that market share number comes into consideration. So the way that we think about market share is really twofold. One is the amount of messages processed cross-chain, and the second is the amount of value moved cross-chain or transferred cross-chain. Those are sort of the two metrics. Today, on any given month, we do roughly $15 to $20 billion cross-chain and roughly 20,000 transactions a day. So that is sort of what gets us to those market share numbers if you compare to the rest of the industry of 70 to 80%, depending on the month, powering some of the biggest applications in the world, be that Tether, be that PayPal's PYUSD, be that the Paxos global dollar that is USDG, all of the Bridge or Stripe stablecoins, things like Agora Finance, Wyoming, of course, and many, many others. And most importantly, that zero number that you see in the top left, zero exploited. That is what we live and breathe as security, and very proud to say that we've built this battle-tested infrastructure that powers, again, roughly 80% of the world's on-chain movement cross-chain. Any questions on that before I keep going?
Nope. We'll try to do the questions at the end if possible, just for efficiency.
Absolutely. Sounds good. So this is the technology stack. It is intentionally a complicated slide. What happens under the hood to power these billions of dollars that move cross-chain is a number of technologies that we built, sort of layered from Layer 0, as the name indicates, all the way up to off-chain infrastructure that is built on top, all the way to contract interfaces and ultimately applications. So I won't really go one by one on these boxes, and maybe that's a follow-up technical call to the extent that there is one. But the technology stack, again, we've sort of built from the bottom up to facilitate all this movement. This is, again, sort of a representation of what the actual cross-chain flow would look like for a message from end user on the source chain all the way to the destination chain, what happens from smart contract perspective to a off-chain infrastructure perspective for security and attestation to ultimately gas abstraction and the like. I'm going to skip past this. If we want to come back to it and actually go through a flow, we can absolutely do that. But just for the sake of time, we'll sort of move on to what that actually means and how this technology is being used. So today, roughly 71% of the world's stablecoins are issued via Layer 0, many of the names I mentioned before. And when we say sort of powered or issued by Layer Zero, it is sort of the first party way that these stablecoin issuers, and not just stablecoin issuers, have chosen to implement interoperability across the different blockchains that they would like to support. So the best example that I always give that I think rings true is if you are familiar with Circle and USDC, they have built what they call CCTP, the cross-chain transfer protocol for USDC. So they have built this in-house, right? They have chosen to not do it with Layer Zero and kind of build it in-house. That is probably the best example of what every other stablecoin issuer has done with us, is essentially build their own modular configurable CCTP version, just as Circle did for USDC. All these different asset issuers did via Layer Zero. And so what that then enables sort of in a real world example is, and this is a real transaction, the largest one that we've seen to date on top of the Layer Zero protocol, one click, $800 million of USDT Tether moved from one blockchain to another. So in the traditional system with Swift and banking rails that we're all familiar with, that process would be quite convoluted, right? Many, if possible at all, given such a large sum, right? From submitting the payment to all the various intermediaries to potentially FX conversion, settling, roughly 2 to 5 business days, hundreds of thousands of dollars in fees. This 800 million transaction that took place roughly 3 minutes for the cost of roughly $1.50, really just gas that's required for public blockchains, and settled on the destination side, again, just within minutes. So that's sort of what the technology enables and sort of the level of scale that is built on top of Layer Zero. However, that's of course not limited to stablecoins, right? So on-chain cash or tokenized dollars are just one example of the 700 plus different applications that we power. But you can do so many different things with this technology because the way that we built it kind of from first principles is incredibly modular, incredibly configurable. So you can, again, it's all sort of data to us, right? We're sort of agnostic to the actual transaction. It is just simply a transfer of data. So tokenized equities is something that we're working on quite a bit today. We power things like Ondo Finance, tokenized equities, Denari, if you're familiar with those folks. We're building Robinhood's tokenized equities. Again, similar concepts of Jax actually enabling the asset movement cross-chain. Tokenized funds, obviously very relevant topic in the institutional space today. Things like Franklin Templeton's Benji Fund. There's a couple others that we can't name names of, but tokenized money market funds is something that we're spending a lot of time with. And then, one of the sort of key differentiators, and again, we can take this back to the technical slide to actually go through a flow of what it would look like, for example, for the New Hampshire stablecoin to move cross-chain. But one of the bigger differentiators that Layer Zero has from a security perspective is what we call DVNs. And these are decentralized verifier networks. This is an ability for the asset issuer, for the application to own and configure your own security. So what that means is it's that attestation mechanism for each cross-chain transaction. Again, if you want to take it back to the Circle example, what CCTP really is an attestation service that Circle runs on AWS, and they sign each and every single mint burn cross-chain. What these DVNs allow you to do, and we have 60 plus of them with some of the biggest partners in the world, be that Google, my alma mater, be like Paxos, Deutsche Telekom, Fireblocks, FCAT is the Fidelity Center of Applied Technology. So Fidelity runs one of these. You have an opportunity, and Niall will explain sort of how Wyoming does this today in a practical example, but to own that cross-chain security. So you can either configure which one of these that you want to rely on or trust for each cross-chain transfer, or you can run your own. And in many cases, many of our asset issuer partners do. So you see Paxos there, for example, they attest and secure every single PYUSD and USDG transaction as the issuer for those stable coins moving cross-chain via Layer 0. Fidelity does this for their own internal use cases and for other use cases, third party, et cetera. So this is a very unique thing to Layer 0. And again, we can touch on it more in the actual practical example through going through the architecture. So there's this sort of, and I think both of these will be incredibly relevant for you all, but there's these smart contract primitives. That is the Layer 0 messaging protocol that asset issuers can integrate with. And you can do so many different things on top of the smart contract layer. So almost think of it as like, the way that you would think about a blockchain, right? It's called Solana. You can kind of think of it, the Layer 0 messaging protocol as a smart contract primitive. And then there are products that are built on top to enable folks such as yourself to build and to make things easier rather than just coding in Solidity and smart contracts and GitHub repos. There are products that we build on top. Two of the most relevant ones that we'll touch on today is our console product and our value transfer API product. The console product, I think, particularly relevant to you all if you're looking to issue and manage a New Hampshire stablecoin. This is essentially almost think of it as analogous to a cloud console, right? GCP, AWS, you have a console that's built on top of this, incredibly vast infrastructure layer that is, the virtual machines and the data centers that Google or Amazon have all over the world. You can kind of think of it as similar on top of the Layer 0 protocol. So it's the full end-to-end product for you all or for anyone obviously to use for the entire life cycle of the tokenized asset. So from actually deploying the asset on chain to managing everything from a security perspective, from a compliance perspective, et cetera, to distribution, monitoring and analytics, enterprise grade support, et cetera. It's almost, think of it as kind of a tokenization platform. And again, given a limited amount of time, I'll kind of keep going here, but this is something that we, would be happy to do a demo of, and it would make your life significantly easier building on chain. And then the second thing, the second product that's probably worth noting is our API suite of value transfer. So again, sort of what you integrate at the smart contract layer with us. Then we have APIs built on top for you to be able to access those capabilities and for others to be able to access those capabilities. So what that really means is your most relevant bucket here is the OFT bucket. That is our omni-chain fungible token offering. That is what you would integrate, or what Wyoming integrated, or all these other issuers integrated to actually move the assets cross-chain in a native capacity, native minting and burning. This API allows you to then access that capability. So for example, if you integrated with the Layer 0 protocol for the New Hampshire token, we have this API suite integrated into the biggest wallets and exchanges and fintech platforms, et cetera. They would automatically then get the capability that you integrated on top of Layer 0 just within that application interface. So think of it as, you're in MetaMask, the New Hampshire stablecoin launches on 4 different blockchains. As you're in MetaMask, you get access to the New Hampshire token because this API is already integrated there. And then a MetaMask user can click, move $100 of New Hampshire stablecoin from this blockchain to another. And on the back end, it hits your implementation of how you built this on top. Similarly, we offer not just interoperability between different blockchains for the same asset, but also cross-asset interoperability. So again, same user flow. We've now, integrated the New Hampshire stablecoin. Someone in MetaMask has USDC. They want to click one button and move that to the New Hampshire stablecoin. That enables a swap on the back end, again, that we have built with you and sort of integrated to enable movement from other assets, other stablecoins, essentially an on-ramp and off-ramp into the New Hampshire stablecoin from other stablecoins. So that's sort of, this API is very powerful. It takes everything that's built on top of Layer 0 and creates a very simple API endpoint to access all of that. I'll pass it to Niall. That's very general overview of the interoperability protocol. We'll let Niall speak to our specific engagement with the Wyoming State, and then come back to our presentation on Zero, the Layer 1 blockchain that I mentioned.
Amazing. All right. Thank you, Simon. So happy to go deeper into Wyoming and how Layer 0 enables the Frontier token to operate across multiple chains. So today, the Frontier token is live across several blockchains, including both EVM and non-EVM. And it's fully interoperable, meaning users can transfer the asset one-to-one across chains without any kind of liquidity constraints or slippage. And importantly, it's not a pilot program, it's fully live in production today. And it's really built on top of two key components. The first is the token standard, which is the ERC20F, which is the Fireblocks token standard, and that really enables a lot of compliance features pivotal to the contract, such as whitelisting, blacklisting, and other kind of enforcement options. And then on top of that, it's also built on the Layer 0 token standard called the OFT. And that is what ultimately enables that mint and burn across chains. So by design, it's compliant and interoperable from day one. So to jump into the practical example then, so what you're seeing on the screen here is a transaction of the Frontier token from Hedera mainnet to Ethereum mainnet on Layer 0 scan, which is basically just like an explorer to view these kind of cross-chain transactions. And there are a number of kind of features to look into here. Firstly, you can see the time it took to move the asset from Hedera to ETH, which is 1 minute 31 seconds. And this pretty much varies from chain to chain in terms of time, but shouldn't take any longer than 2 minutes, with the fastest transactions typically taking 30 seconds or so. And then building on what top of Simon said around that DVN modularity, what you can see here is that for every cross-chain transfer of the Frontier token, you have the Wyoming State verifying every single transaction, and that is required. The entire workflow cannot actually complete until the Wyoming State verifies that transaction. And that security piece is a huge option for them. In addition to that then, they have the Layer 0 Labs, also operating a DVN, and a company called Canary. And again, this is fully configurable. They can add or remove DVNs at their own will and take it on a chain-by-chain basis, depending on what their security threshold is for that given chain. And then in addition to that, and without going too deep into the weeds, you can see a line item called the executor there, and that ultimately enables the gas abstraction piece for that transfer so that the user only has to hold gas on the source chain, which is Hedera in this case. So all in all, the transaction shows that it's a good user experience from the end user's point of view, given that they only have to hold gas on the source chain. And then from Wyoming's point of view, a fully configurable stack, meaning that they can operate at their own will for these kind of cross-chain transfers on a chain-by-chain basis. So to look at how...
Maybe just one more point to add here. So sort of at that DVN layer is where you would build in, and we would build with you any compliance logic that is required, right? So the verification of the transaction is one, but of course within that verification layer, you can build in a lot of things, right? Be that whitelist or blacklist addresses, sanction screening, freezing. You can build in a lot of these functionalities. I think that now we'll touch on that in a second. But at this, essentially think of it as like as a middle layer of security. Unless it passes the rules that you put in, the transaction is not going to go through. And if it does, then it actually goes through.
Yeah, exactly. So looking into the key deliverables for the Wyoming project and how we operated with them, we partnered closely with the Wyoming project ultimately as their smart contract partner. So we firstly defined what success looks like with the Wyoming state and then worked backward from there. And that involved a number of different aspects. Firstly, establishing the compliance requirements, and one of which was actually the Wyoming state confirming every single cross-chain transfer. So we made sure we wanted that enabled from mainnet. Defining how the token should operate and behave both within one chain and across chains. And then as well, aligning on broader goals, such as including a potential yield-bearing asset down the line, and so on and so forth. And we also ran a number of different education and enablement sessions with the team as well, making sure that they could make well-informed decisions when they were actually designing what the architecture looks like alongside us as well. And then we went into the build and launch phase. And really what this looks like was Layer Zero as a smart contract partner, developing and deploying those smart contracts on both the testnet and mainnet. The testnet piece being a really important aspect to the Wyoming team to make sure that they could get fully familiar with how operations would look like for the state on chain. We also looked at how the asset would look and behave cross chain as well. And then also we enabled and covered the audits for all the contracts that would be going live on mainnet to make sure everything was secure top to bottom. And then what the launch actually looked like, we deployed on 6 chains, again, EVM and non-EVM, that non-EVM chain being Solana, and then went live at the Wyoming Blockchain Symposium as well. And at that point, the operation was fully live on chain, and anyone could go in and transfer that asset one-to-one as well. And just a really important point here on distribution, and one thing we didn't actually mention so far, was an application called Stargate. And this is one of the biggest bridging applications in market today. And the Frontier token was live on that user interface on day one as well. And this would be the exact same case with New Hampshire as well. And every single OFT and token shown today is available to transfer on that application. And then also, Simon mentioned the value transfer API as well. The Frontier token's available to transfer via that application, meaning that if you go to a third-party application that's using that API, anyone can go in and actually transfer the Frontier token as well. So built-in distribution from day one, which was a super important point to the Wyoming team. And now post-deployment, what it looks like is we're a close partner with Wyoming going forward, maintain a weekly cadence and make sure we're closely aligned in terms of what the priorities look like on-chain and support them with all ongoing on-chain initiatives, whether that's supporting agentic payments or particular chain expansions and so on. So we're not just a launch partner, we're a close partner with the Wyoming state with all things on-chain. So then coming back to the New Hampshire token as well, what this ultimately looks like for you and your team is that we have a proven model with the US state that is interoperable from day one and meets known compliance regulations. It's fully configurable, again, coming back to that DVM point with how you want to set up your security and additional points around what the stack should look like. Interoperable from day one, and then as well, distribution from day one via the applications that we've mentioned. So you wouldn't necessarily be starting from scratch with Layer Zero. You would be building on top of an existing structure that we can repeat.
All right. Am I good to keep going on the Zero side, Keith?
You're good to go. We have about half an hour left in the meeting, so we've got some time.
Okay. So we'll get through this piece and hopefully fruitful discussion to follow. So from a blockchain focus, again, we support more blockchains than sort of the entire industry combined at about 170. When we think about sort of where is the priority from a blockchain perspective in 2026, Canton and Stellar are two of the ecosystems that are most recent to the Layer Zero integration. We spent the last 8 or so months integrating both. And launching Stellar this month, Canton next month. But more importantly, where we're going to be spending a lot of our time is on Zero, which is our own Layer 1 blockchain that we announced on February 10th of this year in New York City. That piggybacks off of 2+ years of work in stealth 20 plus PhDs from Carnegie Mellon, MIT, Stanford, all in our Vancouver offices, working day in and day out, and really producing, bias hat off, some of the biggest innovation I think in the space for quite some time. And I'll tell you a little bit about why that's the case and why this technology is really revolutionary, with the intention of building global 24/7 capital markets on chain. That is kind of the vision for the Zero technology. It is what we refer to on our launch earlier in the year as the last blockchain. We think it's still, there's plenty of them. We think it's the last one that's actually required for the space. The tidbits there, and I'll touch on that in just a little bit, is that number one, it's incredibly cost efficient. So 1/10,000 of a penny per transaction. We kind of view the concept of gas and with the abundance of block space as sort of irrelevant. We think that most applications will just sponsor gas altogether, given how cheap it is. It is the most performant technology to date. At launch, capable of 2 million transactions per second, scalable to 5 to 10 million, based on sort of the progression of GPUs and chips. It has an ability, and I'll touch on this in the architecture slide, to validate on anything given its design. I'll show you what that means, but at our February 10th unveiling of this year, we live validated 30 million Ethereum transactions, which would take a year by today's standards, in 27 seconds on 150 Raspberry Pis that were live connected to the network at the venue. So it's, again, incredibly performant. And when we talk about this level of throughput, there's really, there's not that many applications or use cases that even need that level of throughput, which is, but capital markets does. And that is sort of, where this technology is going to be focused on. And again, you'll kind of see that in the next slides. And given our interoperability DNA, one of the incredibly unique things is that not only is this technology completely compatible with EVM, it's also compatible with any virtual machine, SVM, MoveVM, etc. And not only that, but it's actually, we built a completely brand new operating system called Zero OS that allows you to take any off-chain code. So think of an exchange, for example, like Coinbase, and compile it in a Linux binary and put it on chain. So incredibly flexible, incredibly interoperable, and incredibly performant. And sort of the reason and the motivation for us building this, and you may say, well, aren't you an interoperability provider? Like, why would you build a layer 1 blockchain? And the answer to that is, we are, but we sort of view other blockchains as distribution points that in our sort of humble eyes are not good enough for sort of what the financial services world actually needs. And we view other blockchains as sort of, again, distribution points, whereas we view folks such as yourself and asset issuers are actual customers, right? So we don't necessarily look at it as competition, right? Introducing competition. We're looking at it as sort of an extension of the stack. The total market cap of crypto is, $4 trillion-ish, depending on the day. But obviously, the global decentralized ledger as a business model is proven to be a multi-trillion-dollar opportunity that we can all agree on. But the problem is, again, that the current systems are just simply not scalable enough. And so if you look at Ethereum at 15 transactions per second, even if you look at Solana with 4,000 transactions per second, like, it's simply not performant enough for capital markets, right? New York Stock Exchange is roughly 2 million transactions per second. NASDAQ does even more, 3.1 million transactions per second. And so simply, like, these systems are just not good enough. And the reason they're not good enough is because there exists this Pareto frontier, right? Which is essentially the set of optimal non-denominated solutions in a multi-objective optimization where like no single objective can be improved without making at least one other objective worse. Like that is sort of what the Pareto frontier means. And so all blockchains are sort of under it depending on speed or cost, but can never break through sort of this scalability trilemma. And the reason for that is the blockchains are homogeneous. And what that means is that if you look at the validator set, you sort of have the concept of a transaction, a proposer, or a sequencer in a blockchain, and then you have validators that are meant to validate these transactions. The fact that they're homogeneous, which really means that every single validator across the stack needs to replicate state, right? So we know the way that blockchains are built today is that every single validator has the same exact state across the entire blockchain and therefore validates it. It creates bottlenecks that whether you create less validators that are more beefy like Solana, doesn't change the sort of the bottleneck problem. And so like, and this is true really for like all modern computing systems, right? Like they all boil down to three components, which is compute, in the blockchain case, sort of execution of instructions or transactions, storage layer, which is replication of the data, and then ultimately network, right, which is just a communication over the internet. And this holds true for blockchain systems, for any modern computing systems. These are not new concepts. Without getting into the nitty-gritty and to the extent that folks are interested, we will absolutely share the respective white papers across all of these. We have sort of at first unintentionally, then intentionally come across 400x breakthroughs across those different layers. So on the compute layer, and this is sort of what adds up to this entire beautiful architecture and ultimately what led us to actually launching the technologies, because we came across so much technical innovation that was frankly hiding in plain sight to some extent. And so on the compute side, fast ahead of formation optimization, or FAFO, it's a ultra fast scheduler for maximum parallelism. And so this is what achieves that 2 million plus transaction per second, able to actually parallelize the transactions. Again, I'm sort of giving you the tidbits of the technicals here. On the storage layer, we introduced a brand new technology and a white paper about a year ago that is called QMDB, which is the Quick Merkle database. It is an ultra-fast key value store database that allows for roughly 3 million state updates per second and 1 million transfers per second. It's 6x faster than the fastest unverifiable database, right? So even, which is RocksDB made by Facebook, and 100 times faster than any existing verifiable database, which is required for blockchain, right? Verifiable databases. Then there's SVID, or scalable verifiable information dispersal. It is specifically built for this use case to be able to horizontally scale the pipes in order to meet the throughput that we're talking about here. And then ultimately Jolt Pro, which is the most important piece probably out of all of this. Jolt is something that the A16Z research team created on bringing some of the world's best cryptographers in the world on looking at optimization on ZK. Most people are familiar with ZK for kind of what it says, zero knowledge, as in privacy, right? What we applied ZK to is removing the need to replicate state via cryptographic proofs across the entire validator set. And I'll show sort of in the architecture slide what that actually means. This was created and now is owned by Layer 0 and A16Z with some of the biggest names in the ZK space, folks like Dan Bonet from Stanford, Aline Shi, and a bunch of others. But it essentially scales with the size of the data center. And again, maybe I'll kind of go to the next slide here on architecture, but applying ZK for a completely new, novel feature. So what this looks like in practice with Zero is you have the concept of these zones. You can think of, you can kind of think of them as L2s on Ethereum, except they are all owned by the actual underlying layer versus things like Optimism or Arbitrum are really just centralized sovereign blockchains, right? Because folks like Optimism, for example, run the sequencer, which in this case is the block producer, and they can effectively centralize and throttle the entire Optimism network. It does not inherit the security of the underlying Ethereum chain. It simply just batches transactions to speed it up, right? So this model is fundamentally different. You have these zones that are all owned by the underlying. The underlying is an incredibly decentralized set of validators. As I mentioned, right, we did the 30 million transactions on 150 Raspberry Pis. These validators can be as light as a smartwatch because they don't actually need to replicate state. So what we're actually doing is we're cryptographically proving with ZK at the block producer level, the transaction, and then the validator, all they need to do is actually check the proof, validate it, and the transaction can go through. And so you have this incredibly decentralized set of validators that can be hundreds of thousands to millions of validators because we remove this replication bottleneck with block producers that are rotating, not centralized by any particular entity, but they rotate through many different entities to create this incredibly scalable architecture. So you have the general purpose zone, which is, think of it as sort of your standard EVM environment, highly performant, but sort of compatible with all systems. You have our trading zone environment that we are building, which is strips out all the EVM overhead, is very high execution, sub 1 millisecond latency. Again, 2 million up to 10 million transactions per second. This is where we're spending most of the time with our partners that I'll touch on in a second on building capital markets on chain. And then you have the payment zone, which is incredibly fast. It's the settlement layer. It allows for Forex between different currencies via stable coins. It allows for agentic payments, et cetera. And so we kind of have a whole strategy there. That is, again, I'm being fairly high level here. I'm sure there will be questions, but that is sort of the architecture. And so what we're building here is, you know, not Visa level throughput, which is roughly 60,000 transactions per second. That's something that Solana probably could meet today if they ratcheted up the scale. We're building for NYSE level throughput, right? 2 million, 5 million, 7 million transactions per second to actually be able to meet the demand of capital markets on chain. The best part about this is given the cost of a system like this today, if you looked at a homogeneous architecture like Solana, for example, and you were able to suspend the laws of physics and actually be able to use that type of architecture for NYSE level throughput, you're roughly looking at like $3.3 billion in infrastructure costs for this network to run, which is obviously not sustainable. At launch with Zero, and launch will be fall of this year, that's roughly $66 million. And the biggest cost of that is ZK proving, again, because these are heavy GPU workloads to produce those cryptographic proofs. The best thing about Moore's Law and all the innovation in AI over the past couple of years, and obviously the many years to come, is chips are getting dramatically cheaper and more efficient. And so those costs just continue to decrease, and you'd be able to run a 2 million transaction per second type system every single day, every single minute for the year, and only have this system cost roughly $9.2 million in infrastructure costs, which is obviously not a lot in the grand scheme of things. And so what this does is essentially breaks out Zero past this Pareto frontier for the first time, puts it on sort of the top right corner of the scale, and actually solving that scalability trilemma problem. The question is, like, does the world care, right? And do we actually have something here that matters? And you know, there was a point probably about a year ago where we said, you know, maybe we don't even launch this thing, and we just kind of do this as a public good and release this as open source technologies for the world to build on. And in the world did. In fact, we released QMDB about a year ago. We believe that that is the storage system that most modern blockchain systems will use. And that is proven today by Tempo, for example. Stripe took QMDB and worked with us to actually implement that for their storage layer. And so we do think that most modern blockchain systems will converge towards this architecture that we've built. The problem with quote unquote legacy blockchain infrastructure that exists today, it's actually incredibly difficult given the decentralization of blockchains to move to an architecture. We all know how long the Ethereum merge took, 2 to 3 years, right? Ethereum, for example, has a roadmap of 10 years to actually move to this type of ZK-based technology in order to remove some of the bottlenecks that exist on Ethereum. But 10-year roadmap is something that the world cannot wait for. And so we do think that this matters. But furthermore, when we were making the decision whether to sort of bring this to the world in an open source capacity or actually build it ourselves, we went to some of the biggest companies in the world that you see on the screen here and said, do you care about this? And all of them said unequivocally, this is the craziest technology they've ever seen and they must be involved. And so Citadel Securities invested in sort of a new strategic round and is building this capital markets trading environment with us. The Intercontinental Exchange and the New York Stock Exchange are building their on-chain ATS on top of Zero. And the sort of the tokenizing of their equities and kind of, again, their approach to capital markets. The DTCC on the verge of issuing hundreds of trillions of dollars of securities on chain. We'll be building most of this with us. Tether invested a strategic investment on the payment side with USDT as part of the launch on February 10th. We partnered with Google on agentic payments as part of the payment zone. Kathy Wood from ARC joined our advisory board and invested in Zero as part of this as well. And the next space is a large conglomerate out of Asia, Nexon, that invested and announced a partnership with this as well. And so, once we sort of got the validation that, okay, like people actually do care about this technology and they do need it because current systems cannot meet the level of scale, we ultimately brought it to the world. So that is the Zero story. It is somewhat orthogonal to the interoperability story, but it all kind of comes together as an extension of the stack, and obviously the collaboration with New Hampshire from a strategic partnership perspective not only has the opportunity to work on the stablecoin issuance to help you guys build that and take it to market across multiple blockchains, but also bring it to Zero and have it available and accessible to all the institutions and the capital markets use cases that will be built here in the coming months and years. That is where we will stop, and would love to have a productive discussion.
Thank you, Simon. That was a lot of information as well. And just for the record, we don't pick favorites here on this commission, so I just want to state that for the record. I'd like to start with the question about your thoughts on an interstate compact between states on stable coins, and how would that look like? How would the governance, or how could the governance of that, where you have sovereigns as part of the governance of the network, and the whole point is to maintain the sovereignty of the state. I think that's Wyoming's focus. If you could, if you have any thoughts on that you could interject. So I'm curious about exploring that space.
So can you elaborate on that? Are you suggesting sort of a stable coin, like almost like a stable coin state consortium
Exactly.
model, or?
That's right. So the Wyoming stablecoin is the profits go to the public good. They go to the school system and so forth. So New Hampshire would want to participate in, I'd imagine, in that liquidity, right? From the state level, but we would like to capture the public good from our side and not give it to Wyoming, right? And this is all hypothetical, but I'm curious to get your thoughts since you've implemented the Wyoming stable token.
And so, so instead of creating, you're almost thinking of it as kind of an underlying layer that had like, are you thinking of almost like a shared reserve layer with multiple stable coins issued on top? So that way, like you don't have sort of your own isolated environment.
Yeah, so in that one slide, you had Wyoming approving a transaction, and that's probably not Anthony Apollo pushing a button, but somehow the state is approving that transaction. If we issued one, we'd want New Hampshire to be approving that transaction. But also, interoperable with Wyoming's liquidity pool. This is all hypothetical. I'm just curious what your thoughts on that.
Can Anthony join?
There
Oh, is
are,
Anthony-
what was that, sorry?
I was just saying Anthony joined the meeting too. So
He can answer the pushing button question.
Oh, Anthony. Yes, so Anthony's certainly not pushing the buttons on the verification without speaking for him. That is all automated, but this probably warrants a broader sort of design discussion, right? So what you're seeing from a Wyoming verifying the cross-chain transaction is simply taking the smart contract asset or the token and signing off on the cross-chain transaction, meaning, if I burn one FRNT here and mint it here, Wyoming signs that to sort of approve it, right? From one blockchain to another. So if New Hampshire was to issue your own stablecoin, you could absolutely implement a similar compliance mechanism where you would sign the cross-chain transaction yourself from, say, Ethereum to Solana. So you could replicate that model, but that is, in that case, sort of your individual New Hampshire stablecoin here that's moving cross-chain, and then you have the Wyoming stablecoin that is an individual sort of thing here, and that's moving cross-chain. Now you can make those things interoperable with liquidity pools to be able to transfer one, for example, New Hampshire stablecoin for one Frontier stablecoin. But in order to do that, you need to set up essentially a liquidity pool between the two. The alternative to that, which is, and this is an interesting thought experiment, and I know we would actually be glad to work on this with you all, is, for example, what someone like Bridge does, right? Bridge, the stablecoin issuer, they've created an open issuance layer. That's what they call it. So they have this unified layer with shared reserve accounts. So essentially, a BNY account, a Franklin Templeton account, whatever that may be. And each stablecoin that is issued from this open issuance layer can sort of customize the shared reserves, et cetera. And since it is all shared, then it's actually one-to-one redeemable, right? So you can take a stablecoin X issued by Bridge from this shared layer, and then a stablecoin Y issued from this shared reserve layer, and they're completely interoperable because the reserve layer is shared, and you kind of create this quote unquote shared liquidity layer. So from a state perspective, like if you wanted to build something like that, right, and kind of have this fundamental state global liquidity layer, if you will, with shared reserve accounts, but individual stable coins issued on top, you could build a system like that. That would actually be really interesting. That is currently the only way to burn one stable coin and mint another stable coin. Otherwise, they're not one-to-one redeemable, even though they all represent $1.
And the consortium governance would be another interesting thought experiment that we don't have time to get into, but maybe we should explore that a little bit.
There's a comment and then Jim has a question.
Okay, what was the comment?
Mark, he doesn't want to take up the time, but he's got a follow up.
I can't see me.
Oh, okay. Mark, do you want to just say something real quick about your comment?
Sure thing. Like I said, I didn't want to take up Simon's time here, but we've been kind of working with a couple of our build and scale partners and looking at the concept of geofencing any sort of initiative, incentive, grant, etc., that New Hampshire might issue. And then making sure that that grant stays within the state of New Hampshire, meaning that whatever the incentive is doesn't, go across your border and then is spent at a vendor in another state. So we've been looking at that, and that's certainly something that I'd love to talk to you a little bit more about, Casey.
Excellent. And then Jim, you have a question?
Yeah, just, going a little bit further here with this liquidity, how would we see this, whatever coin a holder has being converted to fiat?
Being converted to fiat, that would be, sort of a design choice that you have to make and a partner choice that you have to make, right? So we, as Layer Zero, don't offer fiat to digital asset on-ramping and off-ramping, right? There's a variety of providers that do. Who you build that sort of layer with, Anthony can probably comment on who they chose for Wyoming, but that's sort of a separate problem. We go on-chain onwards rather than like fiat onwards.
Got it. Would you, I can envision, some partnership with TradFi or something, or the banking system in order to incorporate that down the road? Is there any kind of plans, anything in your vision or anything in the company's or in the organization's vision to do that?
Yes. So, first of all, right, like I think we would be more than happy to facilitate and orchestrate that for you all via a variety of different partners. Like Franklin Templeton is a great example of that. They're a close investor of ours and a partner. That's something that we could set it up with. Without divulging too much, since this is a very public meeting with some of our friends here, we are looking into products later this year that will facilitate via our APIs kind of fiat to on-chain flows as well. But on the underlying, it would be powered by one of our partners rather than sort of us ourselves processing the fiat to on-chain.
Thanks, Simon. Great job today.
Any other questions online? Raise your hand. Any other questions in the room? I have one last question, and maybe Anthony could chime in, or we could talk later. The point of the Wyoming stable token is to have Wyoming be able to exercise their sovereignty in the banking system, right? Sort of preserve the two-tier banking system. But they're partnering with a company in Vancouver, which is out of our country. And I don't know the level of lock-in, but was there any thought given to locking in with a company that's not headquartered in the United States or in Wyoming? And, is that an issue? Was it an issue? Was it discussed? I'm curious what that answer is.
Sure. So, Representative Edmond, thank you for having me. Anthony Apollo here, Executive Director with the Wyoming Stable Token Commission. I will keep this to a high level because I think, speaking about our procurement process could be an hour-long presentation into itself. And I would say that I think I did one of those last year in front of the New Hampshire Stable Token Study Commission. But long story short, we had a very robust procurement process that focused on the capabilities of the providers, as well as things like where they were domiciled. So in our procurement, additional points were allocated to any organization or company that was domiciled in the state of Wyoming, because we want to, to the extent we can keep things local, we like to keep things local. On the other hand, we're talking about technology where the development is globally distributed. And if you are looking to lock yourselves in geographically for your work effort and your development, you are probably going to come up short no matter where that is, because it's such a dispersed system. And that was, and we went through a lengthy procurement, several rounds, interviews, demonstrations, and Layer Zero came away as the pretty clear winner in that RFP for token issuance that we put forth.
And maybe just to thank you, Anthony, for that, and maybe just to add quickly on top, Keith, I think I would probably challenge the lock-in term as well, right? I think everything that we do is very anti-vendor lock-in. So just because we are domiciled in Canada, with, by the way, offices in the US as well, there's no lock-in with Layer Zero for Wyoming, right? They can easily switch sort of the provider that is so there's two layers here, right? There's the protocol level, which is incredibly decentralized, and that is just global. There's no domicile for the protocol itself. Think of it similar to a blockchain, right? Like you wouldn't say that Solana is located in any particular jurisdiction, right? It is just a global network. So there's the network piece, and then there's sort of the product and services piece on top, and that's what so Wyoming integrated with the protocol level, incredibly decentralized global jurisdiction, and then sort of set up your own compliance on where do you actually want it to operate on top of that. And then the products and services that we provided, they contracted with Canada, right? But that is products and services on top with no lock-in whatsoever.
As Representative Adam, if I could say just one last note on that in the back of Simon's comment, that was a critical part of our request for proposal and the run-up in the RFI and RFQ process preceding that, which was we have to, for any of the technology pieces, Wyoming had to have the ability at some point in the future to become the ultimate owner of that technology. Whether that was from key management, which is how we operate with Fireblocks, or whether that was owning the smart contracts that function, that essentially give us the interoperability across networks. Those are all things that at this point in time we own, because while Layer 0 initially deployed them, we've now become the ultimate authority in charge of those various contracts. And that was a non-negotiable for us.
Okay, very interesting. And probably another long conversation. We're coming up against time. I see Professor Ornberg has his hand up, and we'll just try to keep the next few minutes brief, and then we'll wrap up.
Thanks for the opportunity. Yeah, just wanted to get in the transcript. This connects, Chair Keith, to your comment around the Dow statute. So New Hampshire does have a Dow statute, and so there are ways for an organization to be domiciled in New Hampshire. So I recognize, going back to the liability question I raised earlier, and the point about Solana not necessarily having a home, that also is a liability gap. So there are multiple reasons why we might award additional points to a contractor who is domiciled as a New Hampshire DAO or a New Hampshire organization. But since we have that law in the books, I wanted to make sure we got on the record that there might be an opportunity for New Hampshire to both reinvest locally, but also to reduce its liability footprint and have better recourse through the utilization of that and promotion of that statute.
That's a great one. And Jeff Peck, you have a quick question or comment?
Shameless plug, because Seth did it. Next weekend, the 18th and 19th, where UNH is actually hosting with the Secretary of State of New Hampshire a Ideathon hackathon around that DAO registry and the implementation. So for those who are interested, I can get you the registration information for that, but highly related to that topic. So I figured I'd do the plug. Thank you.
Yeah, good plug.
We'll be there, Jeff.
And that is an open invitation to anyone interested in participating, right? So it's almost you will. All right. I think this was a really dense, information-dense meeting. So I'm going to be going back over the transcript myself and trying to absorb all of it. So Simon and your team, thank you very much. And Niall, thank you very much for your participation and your focus on UNH Interoperability Lab, which is appropriately named. That was some foresight naming it the Interoperability Lab. All right.
It was all planned.
It was all planned. Yeah, there we go. Let's talk about the next meeting. So we're going to do May 6th, I think, right? The 4th. I'm looking at it right. I have May 13th. Hold on.
We talked about doing 2 Mondays in a row and Monday mornings, and we talked about the Star Wars Day. That's how I remember it.
Yeah, I don't know how I got May 13th.
That was because of Sean from Vantage.
Oh, he changed his schedule. So he needs it on the 13th. Is that what?
Yeah, because he's flying up for our
That's right. So that's what happened.
CEO meeting.
So Vantage Bank is partnering with Custodia, who is another Wyoming connection there with the Custodia. That's Vantage.
Would be afternoon.
Let's see what I think I did in the afternoon at 3 to 5. 3 to 5.
Okay.
Does that work for your schedule, Karen?
Yes, but as listening to this, I'm not sure what I was going to present on is really relevant to the work of this committee. Because I'm looking at this from a much more macro perspective.
Well, I think we'd like to get your thoughts on it, even if it's not, blockchain specific. It could just be like, what are the bad things that could happen? Capital flows. And,
Well, it's not necessarily the bad things. It's more like what problem is this solving relative to the risk
okay.
that it might raise.
Well, let's talk after, and then we'll decide the schedule. But it could be 10 minutes, 30 minutes, 45, whatever, you know. And it will go into, you know, the meeting minutes and get on the record, so. But then we have Vantage, and then, Dan, you had recommended the Link Network. That's another possibility, and we still have SoFi who could come back. So. Dan, your thoughts on the Link Network? Really?
Yeah, I think Link would be good. They do a tokenized collateral for securities and spot trading. So their network they work with brokers like T0. So basically enabling kind of global use of US securities, or I mean, you can even do state securities on blockchain for fully collateralized or margin-based trading.
So, just for the commission members, what are your thoughts on going into the summer months? I know we're coming, I keep saying we're coming to the end of this, but it keeps getting more interesting, and there's like events happening nationally that, you know, day by day that kind of keep it interesting. So, do we want to have, SoFi, Link, Vantage? I don't know if we can fit them all in one meeting. It starts at 3. We could start the meeting earlier and then have Vantage come in mid-meeting. Should we start the meeting at 2 and go to 5 with like a bathroom break in the middle? So we can, it's not long and drawn out. Does that work for everybody? And Karen's presentation, so that's too many. Let's decide if you're doing it, and then that'll help me figure it out. And then we can push one of them to the June meeting.
Maybe I'll just submit something for the record.
That's fine, that would be great. Okay.
So 2 to 5 or 3 to 5?
Let's do it at 2, and we'll have Vantage go later in the program. And then if you want to present what you've written, you know what I mean, like talk about.
Yeah, if there's time.
But I want to make time. So you like assert yourself and let me know.
Okay.
Let's see what else. What's everybody's schedule for the summer? I mean, we could do more remote to fit into people's schedules, but do we want to have a June meeting? Do we want to have 2 meetings in May? Do we want to take off July and September? What are people's thoughts on?
July and August are busy for me, but.
For July and August, I mean.
Yeah.
And any commission members online, just your thoughts, just so I can get in my head what would be productive going into the summer months. We're still a ways away, but getting there.
Keith, I'm flexible over the summer.
Okay.
Keith, I'm kind of I have a lot of travel and moving challenges after June 8th, but I'm definitely available until then. But from June 8th until about August 20th, I'm pretty much out of commission for online work potentially. But I'm happy to do stuff remotely and asynchronously.
Then Brandon and Katie, any thoughts on that? And Dan?
I mean, I'm generally available, especially if you continue to allow for a remote option. It makes it really easy to participate. Can you remind me of when our deadline is?
It's November. So I think we need 2 months backed up from there. I think we could get our report done in 2 months with asynchronous, comments and then, meeting discussions. But I think I'm going to allow for 2 months for that. If you think that's too short, let me know.
When are bills due? It's this kind of conversation. They usually do in September, like
this report is due in November.
Right.
Yeah, the filing period is there's one in September and one in November. So
yeah, that's my thing is I just want to make sure we're in a position if we have to submit a bill, we're not behind on that. So
okay,
or that's independent of this commission.
My thought on that was that I think we've done a lot of the work that we have for our meetings. So potentially a meeting or 2 in May, and then we can spend the summer working on that report and then convening to talk about it live at the beginning of September with a November deadline. Seems like an effective way to get this done. So we can close the record and start processing it over the summer.
But that means no new information going into the summer. You know what I mean? That means just no future presentations potentially. Is that what you're saying?
Right. I think for November, well, I think so. For a November deadline, we can double up in May for 2 sessions or even have another one in April, but I think having more time to absorb and write and then discuss the findings will be pretty important. So, at least for me personally, I'll need a lot of time to absorb and think through this and do my own independent research and that kind of thing. So that's the kind of work I tend to do over the summer. So that's sort of my recommendation, but I am, of course, at the service of the commission.
All right. I guess my concern is the Clarity Act or whatever it finally becomes will make a big dent in what our report should look like. Because we definitely would not look good not addressing what the final version of that is, right? So.
Yeah, I just think if election year, if it's not done by the 1st of August, it's probably not, or second week of August, it's not gonna get done. It's be too close to the elections, but I could be wrong.
Okay. All right, we'll go into the May meeting. Let's start the May meeting at 2. We'll go from 2 to 5 and we'll fit in what we can. And then if we need to have a second meeting in May, we can still do that.
Okay.
And then we can go into the summer months.
This room's free.
Is that okay?
Yep,
Okay.
on the 13th.
And you have, the House has 2 filing deadlines.
Yeah, there's like the primary.
Yeah, there's a September
Yeah.
1st to the 11th and then November 4th to the 18th.
And the September deadline is if you don't get reelected, then you can put something in and have somebody else run with it. So.
Yep.
Maybe we want to put a placeholder or 2 in there just in case. I don't know.
Yeah, that's, I was thinking maybe we could send it.
All right, and feel free to talk to me about any ideas that you have, and I think we have some limitations on group chat or group email because of the right to know stuff, so we'll try to work within those bounds. I think that was it. Anybody else have any parting thoughts on? Any final thoughts? All right, it is,
Do you circle any dates yet in May, or you just, is that to be scheduled?
May 13th.
May 13th?
Yeah, and it was the 4th, not my recollection is coming back, but Vantage is coming.
You want to keep the 4th and do something and then the other 13th? You could do that if that's the way you want to do it.
I'd have to figure out what to.
Because I know it worked for the committee before to do the morning of the 4th. Or at least.
All right, let's keep the 4th, and then maybe we'll have a shorter meeting on the 13th.
Or leave them both, whatever.
Yeah, let's see if Link is gonna be interested and then if so far.
If anything, you could go back on the 4th then.
Yeah, the 4th is what I had on my calendar.
Okay. We could do that, and then
That's
there's
good.
13th for Vantage and anything else in between.
All right,
Does
let's
that
do
work
that.
for everybody?
If anything changes, we'll send out the
All right,
word.
so I'll keep the room on the 4th and the 13th.
So Monday, May 4th at the 10th.
Yeah, at 10 o'clock.
10 o'clock. The 13th at 3 p.m. All right,
And then maybe we can actually get ahead.
that's a good idea.
How are the recommendations decided?
So-
If you're done capturing all the information, then you go into essentially deliberations, is that done by email? Just with the commission members or their meetings?
It
for
may
that?
be online. Well, there'll certainly be meetings for discussing the draft, but there may be some commenting like on a shared document or something like that. So it's difficult to do that in a in-person meeting.
Oh,
But
yeah.
we'll bring it to the public. You know, at least once or twice, iterate on it until we have the final sign. And it's the commission members who vote on the final sign off. And what tends to happen is some of the departments do not take a position. They may even have their own addendum that they want to add. So it's a subset of the commission that will determine the approving and adopting the final report. That's all. Okay.
All right, so.
All right, thanks, everyone.
The 10th and 13th at 2.
All right. Appreciate all the feedback.